Aaron, the message earlier this week when it came to the effect of this war on markets was sit on your hands, don't do anything. Is that still the message right now?
Well, I think it's difficult to take new cash and to allocate it for the first time in this market, but certainly there's been a significant amount of churning within a market in the United States that doesn't appear to have done much since missiles started landing in Tehran. I mean, the S&P is only down about 1% since last Friday, but if you take a look at sort of like the average S&P stock, Tim, year to date, the peak to trough has been closer to 13, 14%. So there's been a lot of movement. Even technology, we've seen this huge software correction over the last year, and the fear is AI disintermediation. But if you look at, again, since Friday, which segment of the market has actually performed extraordinarily well, the software segment within technology. So even though software is down 19%, that segment's up 6%. So there's still lots of opportunities here. And ultimately, it comes back to, widening the aperture as an investor. How much time do you have in the market? What are your objectives, and where are there opportunities?
Hey, Aaron, is it kind of hard though right now to figure out what the floor is that's fundamentally based for the investment environment as we try to wait and see how long this war goes on, as we just kind of wait for other policies from the administration, tariff or otherwise, and then you've got the policies that are stimulative as a result of President's big, beautiful bill. So do we really kind of know what the investment or investing floor is at this point, or not yet?
Yeah, I think, Carol, geopolitical events, and I don't want to, take this particular war lightly. I think it could be more prolonged than not. And I think there could be some negative risks to it. And certainly there are actually some significant positive outcomes that I'm hopeful of here. But if you look at the end of the day, valuation, and you think about the long term or even medium term, like 3-4 years, we think that there are plenty of opportunities here. I mean, there was just a huge technology conference this week, and it was essentially open to the public by one of the large banks, and CEOs of major technology firms were talking about their business models. And it didn't have to do with defense spending. It didn't have to do with deficit spending. It had to do with consumer consumption and sort of the evolving patterns of artificial intelligence. And that wheel continues to roll despite this very unfortunate occurrence in the Middle East.
It does, but I mean, I go back to oil prices and the inflationary effect of that. I mean, with Brent up 40%, WTI up 41% just this year, barely into the third month. Gas prices up more than 20% on average across the country. That eats into the way consumers spend and think about their own savings.
Absolutely, Tim. And that's something we have a keen eye on for sure. To what extent will this 20-30 cent move in gasoline prices just this week potentially move higher? And to what extent will that weigh on consumer spending, consumer confidence, overall inflationary patterns? To what extent could that weigh on the cost of key economies like in Europe, particularly Germany, where they're focused very much on industrial and manufacturing? When you have an 80% rise year to date, not just over the last couple of years in natural gas prices, and I know that's spot price, not contracted price, but eventually it does sort of weigh into the sort of cost of manufacturing. But if we widen the aperture, we think there's still a pro-cyclical trade that is going on both home and abroad across materials, energy, which has received unfortunately, the tailwind's been war, but received a little bit of a tailwind since Friday. But frankly, the vast majority of the rally in energy that we've seen, meaning energy stocks, that is, came well before any missiles started flying in Iran. And that was probably due to price, valuation, and the expectation that we're going to continue to have energy demand and different opportunities, not just in oil and natural gas, but across LNG, exports. Yep.